Hello, agents. Hello, everyone. Annuity Awareness Month, June 2025. Today, we're going to talk about the DIA, the Deferred Immediate Annuity. Literally been doing these since I started in the business. So let's jump into the DIA real quick. This is where a 45-year-old person can put in, 45-year-old male is putting in $500,000 for income at age 65, all guaranteed. So let's take a look at it. Let's look at the positives and the negatives involved in the Deferred Immediate Annuity. So here's the Deferred Annuity June. These rates are effective of 6/24. You got a $500,000 premium going into this Deferred Annuity, Deferred Immediate Annuity. Helps if I click on the right screen here. So we're going to do premium at age 45, income at age 65. The benefit will be $9,607.55 a month for life and 20 at age 65. Client must be alive at income start, or it's just a return of the $500,000. And number two is life with 20-year minimum guarantee as a guaranteed income should he be alive at the start of that income of $2,305,000. So basically, a 45-year-old can put $500,000 in the SPIA, and should he be alive in 20 years, it will kick off no less than $2.3 million. This is all guaranteed day one. Nothing else has to move or be changed or adjusted during the time. So let's look at some details here. This is an illustration I ran on the 23rd. It's based on non-qualified money. I ran in the state of Arizona because Arizona doesn't have a premium tax. Those premium tax states, the income will be lower. So let's look at this. So it's a 45-year-old. The income's going to start in 20 years in 2045. And the income payment will be $9,607.55. And you see, it's a 20-year guarantee. And you can see there, it's $2,305,000 is the guarantee. You see that there? $2,305,812. Now let's get into some more of this. What's the catch? So let's see. What's the catch? The catch happens at early death. What does that mean? So beginning on the income start date, the company will pay the income payment until the end of the certain period or death of the annuitant, beginning on the income start date, whichever is later. If the annuitant dies before the income start date, 100% of the purchase premium payments will be returned. Okay, so you can't lose money. If the annuitant dies after the income start date, and before the end of the certain period, the income payments will continue to the end of the certain period. So let's say he starts income at year 21, passes away, 19 years ago to the beneficiaries. So what is the catch? Here's the catch. In this annuity, I'm looking at a real annuity. This is a real annuity, right? In this annuity, in year 19, assuming the minimum guaranteed values, I believe I'm assuming the minimum guaranteed values. Yes, see, this is the minimum guaranteed values right here. And in the 19th year, you're seeing $1,075,000. So if this client, the same client, one bought a 20-year DIA and one person bought this, the person who bought this, if they died in the 19th year, their beneficiary will get $1,075,000 back. On the immediate annuity, on the DIA, remember, if the annuitant dies before the income start, 100% of the purchase payments are returned. So that's $500,000. So they'd only get their $500,000 back compared to $1,075,000. So that's the catch. So if you die early, you lose all gains. It's a big thing. It could be what? Here it's almost $600,000 based on minimum guarantees. If you look at the other column, it's going to be even higher. Now let's take a look at DIA limited early death benefit. That's the catch. So what is the advantages of the DIA, right? It's guaranteed longevity protection. So let's take a look at those same illustrations we were just looking at, right? I had a comment on when I did a short video of this. And by the way, I love comments. It's always productive to get comments. And I don't name the people who give me the comments. I don't like to call people out. Good. It's always good. I've never had a bad thing with the comments. But the comments are great because this person said, hey, if just 6% and interest in 20 years would get about $8,000. That's true. And I appreciate all comments. And it helps education and shows interest in the product. And also shows alternatives. Like, what are the alternatives? Annuities are not for everyone. They're for a very specific type of person. It's a person that doesn't change their mind a lot, likes guarantees, is like things be set and guaranteed. That's basically what it is. Risk adverse people who are not looking for the grass is greener all the time. So them's not going to change their mind. They're going to say, I want an income in 20 years. They're going to keep wanting that income in 20 years, no matter what shiny object appears in the next few years. These are traditional annuity clients. So anyway, at the 6%, yeah, it's true. $500,000, 6% for 20 years, grow to $1.6 million. At 6%, that's $96,000 annually, or 8,017 if you divide it by 12. However, still 1,589 less than the DIA. So you're going to have to invade principal if you want to get the same amount of income, right? So let's look at some examples on longevity. So again, we're going to go back to this contract with the minimum guarantee. It's $545 for the first 10 years and then pay $265 for the rest of the time. So what does that do? If you're taking that same $115,000 a year as we're stripping out of the DIA, and in year 70, at age 77, they're out of money. You're out of money, right? Now, more than likely you will have moved or whatever. So let's take a look at the more aggressive rate. Let's look at the assumed rates. That would be $545 for the first 10 years and then $520 forever. That's a very good rate. Like a $520, that's a very, very good rate on a safe money investment, right? You're out of money at 80 years, at 84, between 84 and 85, you're out of money. So while you can do this and you'll have better death benefit, it's the longevity. The longer you live, the less likely those other options will be able to beat the immediate annuity, the deferred immediate annuity in this case. So let's look at the growth at 6%. So you grow 6%. The year 19 was 1,512,000. So at 6%. So if you want to take a risk and you think you can get 6% or better, whatever, if someone passed away in the 19th year, instead of getting $500,000 back, this beneficiary's clients would get $1,500,000, so $1 million more. So that's part of the catch, right? Early death on a DIA is bad. You get no interest earnings, right? Just the return of premium. Whereas this person, if they died at the 19th year, you get $1.5 million. But now let's look longer. Let's say this person didn't. So this person lived all the way to 100. Well, at 98, this person was out of money. See, at 98, even at the 6% growth, stripping that 112 a year, you're minus 80,000 in year 98. So you're really out of money at age 97. So if this person lives to be 102, they'll be out of money, but the DIA is still paying, still going strong on the DIA. So that's the strength of the DIA. That's where it comes in. Longevity, not short term. You have to look at these with the right glasses. If I live too long. So looking at this situation where the person was earning 6, well, hey, at age 95, they're looking like, hey, man, I'm going to run out of money in 3 years. That can be stressful. You don't want to be stressing 90-year-olds out like they're going to run out of money. Whereas if they had this, right, plus they might not be in great mental state. They might not be able to actively move their money to make sure they're getting their 6 or actively doing it. Where the DIA takes all that stress away. It takes all the guesswork, all the set it, forget it. It's guaranteed. So, yeah, that's the DIA at 6%. That's what happens. Yeah, but you die at 84, hey, you'll get a 6. Let's say you die at 91. There's still $600,000 left. So is there other options available? Yeah, but this isn't guaranteed. 6% growth isn't guaranteed. I don't know where you can get that currently for 30, 40, 50. This is 53 years. So you got to look at that. We're guaranteeing. But yeah, you can get more if you take more chances. Risk, reward. The more risk you take, the more reward you're going to get. So with the DIA, you're not taking any risk. You're only risking that interest earnings. Here on the 6% growth, you're risking not earning 6%. So anyway, yeah, that's how that goes. That's that. So yeah, and here's some disclosures. I hope that helps. There's always going to be another option. There's always going to be something else. But in the end, for people who want guarantee, nothing beats the immediate annuities for income guarantees, long-term, life in 20, all that good stuff. So X YouTube, LinkedIn for the most up-to-date. Everything we talked about today is no fees, all included in the stuff. Just insurance guarantees. X YouTube, LinkedIn. Talk to you later. Take care. Bye-bye.